Good morning, everybody. At least it's still morning here on the West Coast. I'd like to introduce Brandon Balkman. Brandon is the Managing Director at Net Lease Capital. He is also the original Ferris Bueller from Ferris Bueller's Day Off. The movie was filmed at his house where Ferris supposedly lives. But I'd like to turn the wheel over to Brandon here, and looks like we have a pretty good crowd today. So feel free to take over, Brandon.
Thanks, Mark. The Ferris Bueller thing, I was in college when they were filming at my parents' house in Long Beach, California. And the film studio came in before that and tried to give my parents a deal they couldn't refuse, but they refused. Saying, now we've been there, done that before, and you guys destroy the house. So they said, well, what if we like triple the amount? My parents were like, okay, we can do that. So they had a fun time dealing with that, and the neighbors did too. It pretty much encompasses your life. But I grew up in Los Angeles. The company I'm with is out of just north of Boston in Nashua, New Hampshire. I currently live in Salt Lake City area. Decided to give up the desert with a beach for a desert with ski slopes. So it's a nice trade-off and less traffic. So with that, I'm going to go ahead and share my screen here. Perfect. Okay, you see a screen here with 4 buildings. This is to help introduce who Net Lease Capital is. First of all, we are a real estate company, and we buy really big real estate properties. Usually they're institutional type of properties that insurance companies or big organizations, investor groups would be able to purchase. Not single investors could never do this. We like mission critical U.S. government properties and distribution centers. Mission critical typically means corporate headquarters. We were founded over 28 years ago. Our 2 founders are still involved in the business. We are located, I said, in Nashua, New Hampshire, but we operate throughout the whole United States. We've done a number of DSTs, or Delaware Statutory Trusts. We're on our 32nd right now, and we are coming up with number 33. It should be available in another month. We have done over $15 billion in transactions. We own over 250 of our own real estate that are not DSTs. We're a big player in the market, along with many of the other names you might have heard in this business. We just tend to be more quiet because our deals typically sell out faster, and we have smaller selling groups. It's kind of like if you're in the group, then you get the deals. If you're not, you never hear about it. And Mark Creason is one of those in guys, so he hears all the stuff that we have. Now, some of you may be new to the 1031 game, so I thought I would either introduce this to you or reemphasize or remind you of 7 things that you should remind yourself of regarding doing a 1031 transaction. The benefits of it. One, and the most important thing, is you're deferring your capital gains and the depreciation recapture. 2, you're getting a fractional ownership in a real estate property that you would never be able to acquire on your own. These are generally large institutional type real estate. You're owning a fractional interest, so your risk factor is less. It also allows you to diversify that fractional ownership into numerous different properties. You're able to do that because of the low minimums we have. We have a $100,000 minimum. So, if you have $500,000, you could spread it out 5 different ways if you wanted. When you do that, you also have to deal with taxes. So you may not want to diversify that much. But diversifying your real estate into different types of not only asset classes, but also geographic locations, different types of managers. It helps diversify and protect your hard-earned money. You also have the potential for monthly distributions. So offerings come out with a pro forma, and the pro forma are very good guesses of what's going to happen. In our case, they're better than guesses because the U.S. government, on the properties that the U.S. government is leasing, they actually guarantee the payment. So a lot of times it's more than just a guess. You also have the potential that your property could increase in value. With real estate, we all hope that the property increases, but again, the word potential. Then also, if you're doing an exchange, and say it's a $10 million piece of property, your real estate broker has a $9.5 million property to replace it with. Perfect. What are you going to do with that extra $500,000? Don't pay your taxes. That's called boot. And that boot, or that extra money, can be used to put into a DST. Because of our $100,000 minimum, it allows you to spend only $500,000 as opposed to having to buy a whole new property. Along that same example, say the $9.5 million property fell out of escrow or something went wrong, and you're about to miss the opportunity to identify a property or to close. You can identify a Delaware statutory trust property as a backup, which is possible because these properties are already purchased. There's a surety of close. So it's a really great safety backup for a real estate transaction. So a lot of real estate brokers have realized that this is there, and to serve their clients in the best interest for their clients, this is a great option for them. Now, what is the process here? If you look at this, first of all, you're selling your property, you're listing it. When you do that, you should let your broker know that you're going to do a 1031 transaction, and that you either have or need to find a qualified intermediary to hold the funds once the property sells. You cannot take possession of the money. If you do at any time during this process, you will not be able to do the 1031 transaction. The IRS will disqualify it, and that'd be a really bad situation. When you sell your property, the money does not go to you. As you see the arrow going up, the sale proceeds go to the qualified intermediary. You have 45 days to identify a replacement property. Now, that's where we come in. We have options for you. Mark and other people at Metric have other options for you. Whatever might best fit your situation. That's where you need to figure that out during those 45 days. Now, you don't necessarily have to close it within 45 days because you have an additional, well, actually, you have a total of 180 days to do that. It is easier to close it within 45 days. And there's a lot of sponsors out there that have the ability to close quickly. We're one of those. If you send in your paperwork today, for example, you might be closed by tomorrow. Before the weekend. So things can be done very quickly. It's really based on how well you filled out the paperwork. Paperwork is typically fillable, so it's very quick. Now, there are two different types of Delaware statutory trust. There's cash flowing, and there is zero cash flows. And we at Net Lease Capital do both. The cash flowing DST has basically a check or money coming into your account through the ACH. They call it mailbox money every month. And it's really a turnkey type investment. The zero cash flow, you might ask yourself, why in the world would I do a deal that I can't earn any money on? Well, the zero cash flow deals have unique capabilities. These are very highly leveraged offerings to the tune of about 85% levered. It's a really great way to come up with cheap debt. So the debt replacement, it's generally 15%, 15 cents on the dollar that you are paying for that. You can replace any kind of high leverage you might already have. So a situation might be that you had this apartment building for years in your family. You needed some cash, so you went to the bank and you levered it. You got your money. So you already have been paid for that property. And when it comes time to sell the property, you are going to have to recapture, the various things that you've written off, as well as pay that debt to the bank. You will probably be left with nothing. Some of you might even be negative. So this type of property can help you solve that situation by purchasing a new property and then deferring the tax. And these are long-term, they're 20 years. So you can just put off the tax man for another 20 years. And if you're older, no problem. Your heirs get it. It's, if you're hoping, of course, the property will appreciate. And we'll go into an example of a type of property we do that for. Another point is it's good for foreclosing. And that's interesting. We got into this business, as I mentioned, our two founders, they got into this business. They were with a real estate company and they ran across Sam Zell. Sam Zell had a problem and he was having a problem finding a solution. He had a number of Kmarts that were going into foreclosure, and our founders approached him with some properties at very high leverage and explained to him and helped him work through it through some tax attorneys on working with the bank on being able to take out the properties from his ownership, give them back to the bank, and do a 1031 exchange. And instead of paying anywhere from 30 to 40% to the US government for taxes and recapture, he only had to pay 15% to get into these types of properties. So it's something that you could do yourself. It is complicated. You do need to have additional help to do that, but it's an option. Now, there are lots of different types of properties you can do a 1031 exchange into. They did change the rules a couple of years ago. You used to be able to see things like equipment leasing or artwork on this list. No more. But there are some interesting things. At the very bottom there, you see oil and mineral rights. There's raw land, lots of various things. We keep to our knitting. We like really one thing, and that is high quality tenants. And you can typically find that in office buildings for the US government, for corporate headquarters. And we also like industrial buildings, again, with very high credit tenants. And that pretty much limits you to Amazon. So there are 4 different types of net lease properties. Just to remind you, you have the single tenant, single net lease, which is where they just pay the property tax. A double net lease is the property tax plus insurance. Triple net, or 3 N's, is your tax, insurance, and maintenance costs. Most people think that's all there is, but there's also the full service. Full service net lease, that is where there's a base amount paid, and that includes tax, insurance, and maintenance. So the leasee is paying this on a regular basis, typically monthly. And any increases that come up are determined by the fixed base rate times a percentage of the change in the CPI, or the cost of living index in the United States. Now, any special expenses that might come up, and we've had this happen, where they decide to paint the building, they want to install fiber cable, all kinds of strange things might come up. What they'll typically do in the case of the United States government is request it, and then we'll go out and get bids, and they'll approve them, and then they'll pay us after the fact. So there are different types of net lease. That CPI index, you can see that it's pretty stable. We assume that it's going to be 2% in our pro forma. You can see that back in 2010, it did go down below that. And there's been a few other times, but in general, it's higher than that. And of late, it's been much higher. So Net Lease Capital, we target credit tenants with corporate guarantees. And we like 15-year leases, preferably 20 years. They have to have strong real estate fundamentals. So the type of projects that we have done in the past include the corporate headquarters for Sun Microsystems, Hershey's, as in chocolate bar, Verizon, as in telephone, Amazon fulfillment centers, and United States GSA leases. The way the US government works is all leases go under one arm, under the GSA, the General Services Administration. They do all leases. So if you have a lease with them and it's for a specific department or organization, they could change that because the lease is with them, not specifically with one organization. So some of the deals that we have done in the past, you can see here, we did 3 FBI field offices and a National Archive. This was one DST. It's pretty awesome to be able to invest in the FBI. This was just after COVID, and they had to come to work because they had to check in their evidence. They have to interview people. The National Archives, the stuff's staying there. This particular National Archive building on the bottom left houses all the US military records. It also has some strange things, one of which is the windshield of John F. Kennedy's limousine that he was shot and killed in. Why they keep that, I have no idea. So for some of you old folks out there who watched Raiders of the Lost Ark, and at the very last scene, you saw a crate going into a building, you're wondering, does the US government really do that? The answer to that is yes, they do. They keep weird things in buildings just like this, and they're highly secured. And DST owners have owned a piece of it. So it's kind of cool. Also, there are 6 Social Security processing centers and hundreds, if not thousands, of little Social Security buildings all over the United States. We don't like those smaller ones. They tend to close. The 6 Social Security processing centers are strategically placed and politically appointed to be where they are. This is one. It looks like a corporate headquarters. It's in Birmingham, Alabama. What you don't see is right near it, behind it, is a Treasury Department building that's much smaller that houses the IRS. They strategically placed their building next to this so they could utilize the shared areas such as the cafeteria, child care center, physical fitness area. There's actually a judicial courthouse in here as well, and a secured parking area. It allows the US government to have a kind of a main headquarters in an area, and then other facilities can come around that area. So if they ever needed to downsize or close, they could close those smaller places and then come into buildings like this. So it's a really good plan. And we want to buy these types of buildings, not the type of buildings that the Treasury Department is in currently. Veterans clinics, we love them because they support the veterans hospitals. Veterans hospitals are expensive. People are there overnight, where the veteran clinics, these are outpatient. They're in for one day and they're out. This particular one is in the northwest section of Las Vegas, where there happens to be a lot of veterans. You'll see us doing a lot more of these in the future. The United States Citizenship and Immigration Department headquarters is a Delaware statutory trust, and we own it, and it's available right now. This, the USCIS is there about 2-3 o'clock on this clock type of diagram. You can see that the Department of Homeland Security has many different organizations. And this particular one is located on the southeast corner of Washington, D.C., as you see with the red star. The map on the right shows you that it's 7 minutes from the back gate of Joint Base Andrews that the executive branch uses quite a bit. Also, ICE has a presence there, as well as other types of Homeland Security facilities, which is important to remember because, as I showed you before, even though the USCIS is assigned to this building, any of these other organizations would have first right to go in there as well before other US government departments go in there. So again, we like to have the building that everyone wants to be in. Why do they want to be in this? You'll also notice next to the red star on the map on the right has a little M. That stands for Metro. There is a Metro station in the parking lot. And you're on the 495 freeway. It has 2 exits on either side of it. The location is spectacular. So we're really excited about this product. It has a fairly low loan to value at 22.64%. It's a huge equity raise. We do have equity available in this. It is currently paying 5%, and the average is 5.25% over the life of the hold. This hold is projected to be about 7 to 12 years. The way the US government works is 5 years before the lease is due, and this is a 15-year lease that's due in the year 2035. So in the year 2030, 6 years away, they could approach us and talk to us about what they would like to do, and then give us an agreement going forward. Now, that agreement process could take a year or 2 to complete. The government is slow. They used to do this 3 years before, but they're just too slow. So they started 5 years before. So it's hard to tell when we'll be able to do this, but the earliest would probably be 7 years. The latest would be 12 years. And then we hope to get another 15 to 20-year renewed lease at that point in writing, and then we can put this up for sale. So an investor would not only earn 5.25% average, but also have the opportunity to possibly have an increase in value when it sells. There are 5 different levels of security in US government or federal facilities. The particular one that we're looking at here is level 4. Most facilities that have people coming in, as well as they work with law enforcement or have intelligence, they have to be level 4. This all came about after the bombing at Oklahoma. They realized that the buildings were just not safe. And so they have now enforced crumple zones. So we go to this picture again. This picture looks like a normal corporate headquarters, but there's a wall that goes around it, and there's also poles. There's no way a vehicle can get into that building by driving through it unless they're traveling faster than 60 miles an hour, and it would be very difficult with the roads the way they are to do that. There are also crumple zones in this building, so the building will not collapse all at once if there was a very large explosion. The HVAC system is compartmentalized, so if there is an agent in the building in the form of a dust of some sort, it can be, people there can be safe. There are escape routes to staircases or stairwells that are enormous, with doors that close that pretty much make this a bomb shelter. The glass is not only sound proof, but also blast resistant, where it would crumple like a car's window instead of shattering. The list goes on. There's lots of stuff. Depending on the building, is the type of protection they have. If you'll notice, there is level 5, and that consists of the Pentagon, CIA headquarters, and the White House. The White House even has missiles, as we understand, that come out of the ground. So there's a lot of interesting protection the government has put into their buildings. It's important to realize that as the U.S. government shrinks some of their office space, which that's they're required to go to a level 4 building if they have intelligence or other types of requirements. They have to go to a level 4. And that is awesome because they have to go to buildings like ours. They're super expensive to build. The U.S. government typically will not build them themselves. They'll have other people pay for them, and then they have a guaranteed lease from Congress to pay it. And you're saying, oh, but what if there's another shutdown? They won't pay it. They might defer the payment, but by law, they have to pay the payment. That's why we like these type of leases. And this is my favorite quote from Ronald Reagan. No government ever voluntarily reduces itself in size. Government programs, once launched, never disappear. Actually, a government bureau is the nearest thing to eternal life we'll ever see on this earth. So you say, oh, but they're going to get rid of that department. We doubt it because they have hardly ever done it before. Some of the challenges the GSA has, of course, is a lack of level 4 buildings, and they have to have them. Number 2, they need to have longer leases because they have less people in their contract administration department. So they need to cut down on the amount of time they spend. The buildings are getting older that they have. There's cybersecurity risks, and so they need to have these newer buildings that protect them from that. And number 8, they've really have come to terms with remote working does not work in many federal government type of buildings. Other types of projects that we like and have availability in Dollar General, we currently have a pack of 20 of these stores located in the middle of nowhere. We like that because if you are in competition with Walmart, you're not going to win. And so these places are truly isolated. You see the 3 at the very top of Michigan up there. When our acquisitions guy went by there, he was surprised to see that they sell bait. They specialize in fishing around there. So the way it works is a manager of a Dollar General store has like a menu of things that they can order for their store that fits their locale. And that list has gotten really big lately. They can now do fresh fruit and vegetables, bread, milk, medicines, and bait, of course. So you never know. This one's located in 5 different states. These are new. There's a 0 loan to value, and it's paying 5%. But we're currently doing a special sponsor credit where we will give you additional units. So say you put in $100,000 in this offering, we will give you credit of $20,000. So you'll actually be investing $120,000 in this property, which is the equivalent of a 6% distribution. So everything will say 5%, but you'll be earning 6. And so we're doing that currently. Our third and final offering is this 3-pack of Amazon fulfillment centers. These are 5 stories each. They're full of robotics. These are not distribution centers. They're fulfillment centers that supply the distribution centers. So a worker comes in, checks in, goes into a cage, and then the robots take over. and bring all the items to them. These are located in these 3 states of Michigan, Tennessee, and Virginia. These are also new. They have a very high leverage. They're above 85%, and they have an excellent credit rating. Finally, I want to make sure you understand that your 45-day experience of searching and finding and identifying a 1031 is a very brief time. We understand that. And you're usually in these investments anywhere from 3 to 12, sometimes 20 years. Who's taking care of you during that time? Our investor services team is. And these are the things that we do for you. We give you the welcome letter. You have access to an investor portal using Juniper Square. We sent out all of our tax information this year, and we have before March 15th for your tax year-end reporting. As you should be aware, all of the information that we have is located in a private placement memorandum that you can get through Metric. That's called a PPM. And part of that is also an executive brochure that has much of the material that I just shared with you. If you have any questions, you can reach Paul or myself at these locations. Okay, it's now Q&A time.
I got a couple of questions that people have written in. I'm going to start from the top here. You sell an investment property, you need to replace the cash out and mortgage balance. How do you handle that? You want to give that a shot?
Let me just read that. If you still sell an investment property, you need to replace the cash out and mortgage balance. Okay, so you're right. If you owe the bank 50% of the sale, you have to replace that with another property that has a 50% leverage or higher. If you were to buy, say, our US government deal for 23% leverage, that's not going to cut it. You have to find an additional 28% in leverage. So that offering wouldn't work for you. But Mark and his team can find you a property that matches that. If you had a property with only 20% leverage, our deal would work for you. If you have an offering where you've paid off the mortgage balance before, and when you sell, you don't owe anything, and if you took the money, you would owe the IRS quite a bit of money because of the recapture. All of our properties would work for that offering.
Another option would be to balance between your 20% deal, if somebody wanted in on that, and your 3 Amazons.
That's a good point. Yeah, you can blend deals. You can blend a really high leverage deal with a low leverage to equal it out to get a blended 50% average. Good point, Mark.
Somebody asked us what our current rates are. We're seeing returns from 0 on a zero cash flow deal to almost 7% right now, across different asset classes, different locations, risk parameters.
And Mark, it's important to point out on that really very high leverage deal, the 85% levered, it actually is earning money. I mean, it says 0 coupon, thinking, that's paying 0. Well, it's paying 0 to you, but it's paying the bank. Because it's so highly leveraged, all of the money earned must go to pay the debt. That said, then you, the investor, would be responsible for any phantom income that's being paid to the bank. And we as a sponsor give you some tools to take care of that so you don't have to come out of pocket.
Yeah, they hyper amortize, so there is a pretty hefty return when it's all said and done. What is your time frame for the 3 Amazons? Do you have an idea on what the hold will be?
Yes, it will be 20 years. Yeah,
it will be 20 years.
Right. There have been some time, we've actually had several in the past that have ended early. And they've ended early because maybe they didn't have as many investors in them. We actually get some very large investors in these deals. Uh, the one investor took down the whole thing. So he wanted out. So we ended it. You have more flexibility. So if any investors out there want to buy an entire deal, you have lots of flexibility when you do that.
Okay, here's another question for you. What is the liability exposure of investors on DSTs?
There isn't. That's one of the protection you have as a DST, that these are loans that you're not responsible for. So I guess really the question is, what can go wrong? There's bad actors. That's why you have to be very careful who you work with. Not all sponsors are created equal. You've got firms out here that haven't been out there that long. That doesn't mean they're bad. They may have been in business for a lot longer, but sometimes there's firms that have been in business very short time amount and they haven't done any DSTs. So I would check that out. But there's also firms that have been in business a long time and have a long track record. We have that, which is one of the reasons I joined up with them, is because they have a really good, strong track record. So that's if they're a bad actor. The bank could then foreclose on the property. Of course, another thing that could go wrong in real estate is your property loses value when they sell it. So at the end of the day, when you go to finish this DST, 10 years from now, and you don't get as much, that could be a challenge, because you could either owe money or you'll have to buy a property at a higher loan to value than you had before.
Okay, here's another one for you. Can you add more funds than the boot to an offering?
Of course. Yeah, you can always add more money. Matter of fact, we get people who invest and they are not doing a 1031. They just like the investment. They say, yeah, I've got an additional $100,000. I would love to put that into a portfolio of Dollar Generals or split it up. We get lots of investors that do that.
Okay, here's another one. I got a couple more here. I want to sell my property named in trust. I plan to do a 1031 in a different title under an LLC. Can she do that?
So we have a great team that will help you in closing the deal, but whatever you came out of, that entity, the same entity, has to go into the next DST with the same name. So you need to change the name before you sell your property, or wait to do it afterwards. I guess there's a third option: get a really good attorney to help you, because it'll get very complicated. And if you're audited, the IRS will not like that. I would just stay out of trouble, stay in the same name when you sell it to what you buy. Don't try and throw in a new entity title or name before that happens.
Just to follow up on that, I just had a situation where we transferred title from one LLC into another LLC 6 months after they bought into their DST. It took about a day, and I don't believe it cost any money to do so with that particular sponsor.
Perfect. And we do the same thing. Again, do it afterwards. It's so easy to do it afterwards. Don't do it in the middle of the transaction.
Okay, here's another one. Where do you do for financing? Is it in-house?
Good question. We do a lot of our financing in-house. We've been around again for 28 years. We have a fund that's for our employees and for companies or organizations we've worked with. They know about us. They're like, hey, we want in on that. So we have an internal fund. So that's one source. But the majority of our financing is unique. it's only possible because we deal with high credit tenants, and we're required to get a Moody's credit rating on the investment. And by doing that, we can then work with states, and we generally work with New Hampshire, and they'll issue bonds. And those bonds allow us to then have the money to purchase properties. And then we have some other just standard companies we've worked with over the years. But those first two sources are our main source for financing.
Just a quick follow-up to your response. DSTs will either have financing or not. They'll have debt on them. If they do, it's non-recourse to the investor, and it's set as the deal gets created. So if you had a $20 million deal with $10 million in debt, that's how the deal goes. So you have a 50% loan to value. So for somebody looking for debt, that potentially helps them too.
Yeah,
okay.
And sometimes people will say, well, I mean, I have to qualify. No, you don't. That's already done. It's already set. We already have the debt in place. It's very simple. You could go to Mark today and say, I want to buy that deal. You're done tomorrow. That easy. So it's a much easier real estate transaction than a typical standard transaction.
Yeah, another point too, and I know you guys get some pretty good deals on financing. This is institutional level financing as opposed to going to a bank as a single asset buyer and going in and doing something with that. So it's easier to qualify if you're an accredited investor. We can close. I think the fastest one I did, I actually had somebody come in at early in the morning, and we did paperwork. We got it approved, and we closed them the same day. That's pretty incredible. But in that case, we had to. They had timing issues. But next question for you. When doing a 1031, do you defer both federal and state taxes?
It does defer your federal taxes. I can never answer for California, but it should defer your taxes. Matter of fact, I think there were only 2 states that have questioned it, and one of them was in California. I think one was Pennsylvania, but they've come to the party. So the answer to that is generally yes. There could be an exception, and then who knows about the future? And that's where California would come into play. They have just been crazy. They try to do all kinds of wacky things. So we actually try and avoid doing any DSTs in California.
Okay, I got a couple questions, but I'll just answer them real quick. Financing is non-recourse, and there is no personal guarantee required. It's different from a TIC, a tenant in common deal. You'd need to personally guarantee financing, and it would be recourse. DST money is non-recourse. The sponsor would have something called a carve-out, not relevant to the investors, but they potentially, if they did something really stupid that violated loan terms, they could be held accountable, but the investors would not. Also, New York defers state taxes on a 1031 at this point. So I don't know of any changes that they want to change, and change it. Pennsylvania was the last of them, though. I think they did that, about a year ago? They started, okay. One more question. How easy or hard is it to sell or dispose of DST investments?
So the official answer is they're illiquid. So you would wait till the end of the period, and then you would sell it. The unofficial answer is that there are secondary markets for this type of product, and you can do that through the sponsor. You can reach out to us and say, hey, I want to sell that. And we might have investors that have already reached out to us, and in our back office can help match those to investors. Or you can go to a third party. I know, for example, there's cttauctions.com that allow you to do that. And there could be others as well.
Okay, do we have any other questions? I think we've gone through them. We've gone about
What is
45
the
minutes
hold
here.
time of these investments when there's no cash out on a monthly basis?
I missed the
Did you-
first part of that question.
He's asking on the zero cash flows. I thought we covered it, but he's asking on the zero cash flows. I believe that's what you're asking, Suresh. But
Correct.
On the zero cash flow deal that you have, I believe you said that it's probably approximately a 20-year hold.
It is. Well, remember, we're getting incredible financing and they require a long hold. So, I mean, it doesn't mean we can't pay a defeasance fee and settle it, and we have done that. But generally, we like to tell clients, hey, it's 20 years. And at the end of 20 years, in this case, your 85% leverage would be around 50% because it is amortizing. They're paying down the loan. And then you're hoping that they sell the property for more than they purchased it for. So you might have money in your pocket afterwards on that as well. Just keep in mind that this is not just your ordinary industrial building. It is housing a number of robotic equipment that Amazon, as long as they're in business, is going to have to keep those up. So it'd be constantly be upgraded. So at the end of 20 years, you would expect it would still have the latest and greatest technology in there so that they can distribute to those geographic regional centers that they're located in. Even if they went into, the delivery with these drones, they'd probably go from these facilities. I can't think of anything else that would change the need for having these types of buildings unless technology in the form of Star Trek would suddenly be around.
Beam me up, Scotty.
Exactly. That's about the only other thing that's going to make up the difference of having a need for a fulfillment distribution center like this.
Sorry, one other quick question, follow up on that. Let's say as a parent, we do this investment and we pass and it's 10 years down the road and kids say, I don't want to deal with that. Can they transfer the ownership to somebody at a certain price, or is that?
Yeah, I mean, so officially the answer is no, they're stuck in it for an additional 10 years, but unofficially they would reach out to us and say, we want to sell. And to date, we have fulfilled every request in those because those high leverage deals are a hot commodity. People want those. I've actually got someone right now that someone wants to purchase something and I don't have any sellers. So
there is a gain when they do that, hopefully. Your equity you put in plus some return.
There would be most likely some kind of a gain, we would hope.
Okay, got it. Thank you.
Yep.
Hey, Brandon, I got one more. If you do a DST and you live in New York, but you buy in Florida, can you avoid tax when you finally sell in a no tax state?
That's a question for your CPA, but generally, if Florida decides to have a tax, even though they're tax-free now, you'd have to wind up paying Florida. New York, who knows? I have no idea what their requirements are, but just knowing New York, they're going to want their pound of flesh somewhere.
I think California is far worse than that. They want to
by
track
far
everybody.
the worst. Yeah.
I don't think New York is doing any of that yet, but doesn't mean that they won't take California's lead.
That's the important word, yet.
Right.
But
right.
what we're talking about here is, the rules now, so you do what you can do now, and hopefully they don't change the rules on you. But you know, these are a way to defer your taxes today. They're available, and you can take advantage of it now.
Well, it looks like we're out of questions. I appreciate your time today, Brandon, and
You bet.
I'll see you next week at our ADISA conference. Forward to spending time in the freezing cold of Chicago.
Nice.
You know, if anybody has any questions, I've added my email and my phone number. Feel free to reach out and you know, let me know if I can help in any way.
Thanks for your time. Glad to be on and talk with you guys.
Okay, have a good one, Brandon. Thanks
All right.
everyone for joining.
Thank you,
Bye.
guys.